Yo, what's up guys? Welcome to another Mr. Finance video. I was going to do a video today about my positions and how my performance has been in the markets over the last few years, but we had a big week this week in the stock market, particularly in tech stocks and the NASDAQ. So instead we're going to be talking about the stock market crash and what I've been buying this week, and also a bit about why I think that's been happening. So let's jump right into that one. Again, just a reminder, this channel and these videos are not financial advice for you. I'm just talking about what I'm doing with my money. So you can take from that what you will. Could be educational or just for the fun of watching what I'm doing. But it's definitely not telling you what to do with your money. So remember that. Big week in the NASDAQ today. As you can see, this number isn't huge, down 2.35%. It did recover a bit on Friday, but we did get all the way down to about 22,500 on the NASDAQ, which is quite a significant drop. But you really start to see it when you start looking at individual names. Like if we look at Amazon here, just for the past 5 days, it's down almost 12%. They did report earnings, which people were pretty freaked out by the amount that they're planning to spend on data centers, on CapEx. They're planning to spend $200 billion with a B on that, on data centers, on GPUs. So investors are getting pretty worried by those numbers. But yeah, you see this is quite a big drop on that one. Palantir, if you know this one, this is a very risk-on tech stock, pretty popular with retail investors. This got down to, it's at 135 now. I think it got maybe even in the high 120s on Thursday, down 25% for the last month. And if you remember last year, this one got all the way up to over $200. So that has come down quite a bit since then. Then we have Duolingo. I talked about this one in my last video. I think back then it was about 150, something like that. Now it's under 120. Look at this, guys. For the past year, it is down 70%. Since its all-time highs in the middle of last year, it was at about 540. Now it's down to 120. That is insanely brutal, guys. I am feeling the anal annihilation there, that's for sure. I do have a small Duolingo position, considering adding to it on this recent dip, but yeah, that is quite brutal. Microsoft, this is one of the Magnificent Seven, one of the biggest companies in the world. I think its market cap is in the trillions, around 2 trillion, something like that, but that's down 17% for the last month. So another brutal one there. Again, saw its low around Thursday. It got to around 390, I think, but it's back up to 401. So that is quite brutal. And we have AMD. This is a big favorite of mine, but that is down 12% for the last 5 days, down to about 208 here, but it got around to 190 on Thursday, which was the worst day of the week. And yeah, it was at about 250 last week, so that is quite brutal. This is another one popular with retail investors. So some real pain in some of these high-risk tech retail favorite names this week. And of course, probably the most brutal one has been Bitcoin, down to, it touched around 60K this week. This article here from Forbes, it is down over 50% in the last 4 months. Ethereum also getting hit hard. But yeah, I've got a small crypto position. I used to have quite a bit more, but I still have a little position, so that one is hurting at the moment as well. It has recovered quite a bit since then, though. I think it's back up to around 70K now, so sort of did a little V-shape recovery there, as Tom Lee likes to say. But is it over for the crypto crash? I don't know, it's too soon to say, but it's definitely hurting some people out there. RIP to crypto bros watching this. And let's get a little bit into why there's been so much bloodshed in the NASDAQ and the tech stock scene recently. People have their own take on this, and some people agree with my take on this, which is the Trump pick for the Federal Reserve, which is, of course, like the US version of a reserve bank. He's gone with a guy called Kevin Warsh, who we would pretty much call him more hawkish than dovish, which basically means he's less inclined to print money than people would have thought for a Trump pick. Of course, Trump has always been saying he wants interest rates to get down to 1-2%, something crazy like that. He wants them to just print money and stimulate the economy. But this Kevin Warsh guy, I found this article here from the Financial Review rather. People seem to think he's more of a hawk than a dove, so he's not going to be super keen to just smash those money printers like Trump wants and make money printer go brr. Yeah, so I think this is having a big effect on very risky assets like tech stocks, Bitcoin, Palantir, all those sorts of things. I had a friend asking me this week, shout out Liam if you're watching, he was talking about the crypto crash and how it got down to 60k, and if I thought that would be the bottom, and also why this was happening. I was telling him about the Kevin Warsh pick and how this guy is less likely to print money. But pretty much if you look at the past few years, this chart's going back to 2016, M1 is basically money supply, i.e. how much money are they printing, and then this is the Bitcoin price in yellow. But if you look at these over the past few years, they pretty much match up one for one. Whenever they're printing money like they did in COVID, I think this must be the COVID line here, they were printing money to stimulate the economy because everything was shut down. Crypto went absolutely parabolic. Crypto went absolutely parabolic. And then when they had to reduce the money printing, raise interest rates because inflation was getting out of control, you saw a crypto crash and it went down from like 70k all the way down to under 20k from memory. So Bitcoin, risk assets, they kind of just take the liquidity from the money printer go brr, and it goes into these risky assets like Bitcoin, Palantir. Even I remember in 2021, you had some absolute snow dog stocks, we would call them absolute pieces of crap stocks, like, I don't know, GameStop comes to mind, but they weren't the worst. Just companies that are making no money, like Beyond Meat, for instance, were just going crazy. And it's just whenever they print money, it just flows into these crazy risky assets. So that's kind of a little bit about the relationship between money printing and crypto, but also other risk assets. Already gave you guys a preview by mistake on this, but we also have the SaaSpocalypse, they're now calling it. I touched on this a little bit in my last video. Some of those stocks I was talking about in that video, like Microsoft, Adobe, Duolingo, they're all software stocks, right? You pay a monthly subscription and you get access to some sort of software services or an app, and also some cloud storage for things you're doing in that app. Pretty much, people think these SaaS stocks, software as a service, as we call them, stocks are going to be wrecked because people can just come along with a model like Claude or ChatGPT from OpenAI and vibe code their own version of these apps, and companies won't have to pay a monthly subscription service anymore. They'll just be able to negate paying for the software because they'll be able to do it themselves with AI. That's the narrative anyway, and we did see quite a lot of selling in this industry. Looks like Unity was down 40% according to this picture, Snowflake down almost 22%, ServiceNow down 16%. So some of these names have been hit particularly hard, both because of this Kevin Warsh nomination and also because of this SaaSpocalypse, as they're calling it. So let's get into a bit about what I've been doing this week with my portfolio. I know in the last video I talked about PayPal and how I thought that was undervalued, and I named it in one of those picks for cheap tech stocks for 2026. I actually sold out of my PayPal position this week, and that's due to two reasons. One is the Kevin Walsh nomination. I thought if Trump had picked someone who was more dovish, more inclined to print money, that would flow into a undervalued stock like PayPal and maybe lift it up to 90 or $100. But I think with Kevin Walsh, we have to be a bit more cautious, I would say. There's less of a guarantee that that will happen. And also they came out with their numbers this week and they were pretty disappointing. Also their CEO quit. They got some guy from HP, which personally I don't think is a fantastic company. But yeah, it looked like their profit numbers were still pretty good, but they weren't growing very much. And the stock kind of nuked to like $40. Got hit particularly hard because of, how red things were this week in general. But I've got a new stock which I've replaced, which I'll talk about in a second. But yeah, I don't think, maybe PayPal is still undervalued, but I think there's better options out there personally. But you can keep holding that one if it's in your portfolio. So let's get into what I bought this week. As you will notice, these are all software as a service stocks. So I kind of picked up on some of the deals out there in the market that were happening because of this SaaSpocalypse. I got some CrowdStrike at $379.94 per share, which I think is a great deal. This is the new stock I bought, ServiceNow, which is a company that kind of automates processes within companies using AI. Let's say you need to onboard a new employee and there's a whole bunch of shit you need to do, like set up their email, their payroll. It can automate a lot of that stuff. I got some shares of them for $102.96, which I think again is a fantastic deal. That's down quite a lot from the all-time highs it got to last year. I also added to a couple of positions I already have. I got some Snowflake at $157.24, which I think is very cheap, and also Microsoft. I got some of them at $3.93.39, which in my opinion is a really, really good deal, especially around that $3.90 level for Microsoft. I saw this on X this week. They pointed out that Microsoft is trading at its second lowest valuation in 5 years, and if we look back, it hasn't been this undervalued since 2022. If you know much about tech stocks and the history of tech stocks, 2022 was an especially brutal year for tech stocks. You had names like Palantir, I think they got down to like $6. Meta, which is now around a $700 stock, got down to $80. Everything was just being fire sold, and for people who bought the dip that year and held until this year last year, they made a lot of money from the amount that things dropped in 2022. So Microsoft is now getting back down to those levels, according to this tweet. Also, if we look at the PE ratio for Microsoft at the moment, it's got down to 25. I think the only other Mag 7 or Magnificent 7 stock that is at these sort of levels is Meta. So it's gotten even cheaper since my last video. Yeah, pretty crazy. But I was glad I was able to pick some up on Thursday on that dip. Also, if we look back, I know I looked at this in the last video, but some analyst predictions for Microsoft. The low point that they've got predicted here is around $392, which is basically what I paid for the shares I just recently picked up. The median target is $600, which would be about a 50% increase from where we are now. And the high target is $730, which is just over an 80% return, which if that comes true, if it does get to this in a year's time, that would be a really amazing return for one stock. So we'll see what happens with this, guys. See what happens with these numbers. Hopefully there's a bounce, but I think the stock is definitely undervalued. And if you're holding long term, I think that's going to be really good for the portfolio. So what are my predictions for next week? Do I think the market is going to keep dropping? I think we might kind of be done with this selling from Wall Street. I already saw some headlines on Friday about people have been buying the dip, and people are starting to buy into those SaaS names, which I talked about. So I would be surprised if we have another red week next week. But if it is, there are totally some other names on my shopping list and some price targets for those. So maybe I'll do another video if that does happen. But yeah, I think we're probably gonna maintain this level for a few more weeks, and then maybe we'll go up or down from there. With Kevin Warsh, I personally don't think he's going to be super hawkish and like raise interest rates or refuse to cut interest rates. I don't think Trump would have picked him if he wasn't planning to at least do some interest rate cuts, especially in his first year as Fed chair. So I think he might be a bit more dovish than people are predicting. I think there will be a lot of uncertainty though up until May, which is when he actually gets into the position. I think he has to go through like some sort of Senate or Congress authorization processes. Yeah, it's not just like Trump can put anyone he wants in there. But pretty much I think there's going to be a lot of volatility until May when he gets in, and maybe even around May once he gets into his seat. But maybe come American summertime, like June, July, I feel like things could get a bit more bullish from there once we have more certainty. But that's just my 2 cents. So yeah, that was kind of what I wanted to talk about for this video. Those are some deals I got this week. Let me know in the comments if you bought the dip, if you slurped the dip, what did you get? But yeah, I think it's going to be interesting times from here. Hopefully we get some more buying opportunities, particularly in these SaaS names. And there's still a lot of great value tech stocks out there I would be keen to buy at some of the current levels. But yeah, thank you for watching this one, guys, and we'll catch you on the next video, which I'll hopefully do soon. See you later. Bye.